Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is August 16th, 2012. Lots to talk about, so let's get started. This is a chart of the SPY, which is the ETF that tracks the S&P 500. All right, let's just take a look at what's going on here. Quick recap: we had this 141.36 level here, which held up. And like I said in previous videos, I can never tell if this is going to be an intraday trade or a longer term trade. Obviously, the 141.36 could not hold, but it did bounce off the 141.36, which was 2 cents off of the high of 141.38. And then yesterday we kind of still pulled back a little bit, but we were unable to close below this candle. We were also unable to close above this candle. Okay, so just keep that in mind. Again, I am still short from this candle here by buying the SDS times 2 the short the SPY. I am very close to being stopped out. Okay, I'll be honest with you. I didn't think the market was going to have such low volume. I mean, this volume is just unbelievable. Today's volume was 112 million. I mean, it's just been dramatically low. And unless we get better volume in the markets, like I said time and time again, volume is very important. Unless we get the volume back in the markets, then I don't see this thing coming down anytime soon. So, like I also said, this is a chess game, so we have to be precautious. We have to be cautious. I know I just redundant myself just now, but there's a lot of institutional game playing. It's expected. It's something that we already know and that we already have to expect and prepare to defend ourselves against, and that's why we use stops, and I'm close to stopping out. In any case, I don't pay attention to this 141.88, even though it did hold. I'll show you that in a little while. We have the next level here, which is 142.70, and as you all know, with these mathematically calculated levels, even though they do work, I don't make a trade or take a trade until it actually hits that level. So there's no guarantee it's going to hit that level, but there's more of a chance that it should turn over or get a bounce or some sort when it does hit that level. Okay, so if we can get into this 142.78, there's a pretty good chance that we're going to get some sort of a bounce at least, or pullback like we did here. Again, until the volume picks up, we're just not gonna pull back at all. I mean, if you just look at this, it's just been a long, it's just been a float higher. I mean, there's no triangulation type plays like we have over here, where you have a little bit more volume on these days here. So I mean, this week has just been a slow grind higher. Okay, it is options X week, but it's the 2 out of the 10 times that options X is with low volume, but the volatility is still in play. Okay, so you just have to keep that in mind. All right, so what happened today? Today we came down. So this is the start of the day. In case you can't see these lines over here, and that's the end of the day, let me just zoom in a little bit over here. Okay, so we gapped a little higher, and then we sold off. We went right into support. Okay, I can probably draw a support line here, which was probably a double bottom. Actually, didn't really get to a double bottom. Yeah, actually, it didn't even get there. So I don't know who actually took that to trade to the upside on the day trade. But in any case, we created this doji candle. Here's a perfect example of a reversal candle on volume. As you can see, we had high volume here. I guess I really should make a video specifically on volume one day. But in any case, we have this high volume spike here, and then we start going into the same direction, right? So this is down, but on lower volume. And then after that down move on lower volume, you get a spike in volume and a reversal candle, whether it be a hammer candle or a doji candle or an engulfing candle or whatnot. Whatever reversal pattern we get on volume normally shows a possible reversal, in which case we did this on the intraday on the 10-minute. These are 10-minute candles here. Okay, so that's what I mean about needing volume before actually taking the trade. I wasn't actually awake at this time, so I wasn't able to take this day trade. In any case, we went back up to retest this pink support line, pink resistance line here, and then it did pull back. I mean, this pink resistance line is just amazing. We hit it once over here. This was a solid hit. We came close to this one, and we came close to this hit again, but we actually went into it, and it actually pulled back a little bit there. So this 141.36 was very was pretty strong in my opinion. It's just the volume just wasn't there, so it was unable to hold. And again, if you have low volume, then I would have to expect this 141.88 to get hit, and that's actually what happened. So we went right into this 141.88, and then we bounced again. Okay, so we pull back again, and then we break through, and again, every time a price hits one of my calculated levels, the first hit after it hits one time, I don't use it as a level anymore. As an example here, let me give you an example. Because we've already hit this level here on this candle here, I do not expect a pullback again off of this level here ever. Okay, because this level is no longer valid in my opinion because it was already used. Again, use and abuse lines are lines or levels that I do not want to make a trade off of. Okay, so we even though we did get a pullback off of this pink line here, I wouldn't have taken this trade anyway. All right, so we actually pierced through this line and we went right into this 141.88 level, which is this is a calculated guesstimation, not guesstimation. How should I say it? I think I had a little bit too much coffee here. I don't know what I'm thinking anymore. The 141.88 level was a test level. Okay, this was something that I wasn't really paying attention to because it wasn't really working out as well as I thought it would. But today it worked out perfectly. Went right into this 141.88. In fact, we closed on this candle at 141.87. That's just a penny off. This candle's high here was 141.83. So that was about 5 cents off, and then we pulled back. This would have been an excellent day trade here. Okay, and again, once it hits the first time, I don't trust the second anything, or second, third, or fourth, anything after that. After the first time, I don't trust it anymore, whether it be in the intraday or on the daily chart. Okay, and then we pierced through this level. We came back down, retested the 141.88 again, and then just started trading higher. We bounced off again. We came up, and then obviously we bounced off again. And towards the ending of the day, we get a volume of let's see, 7.5 million traded. Okay, so lots of action. Okay, but if you just look at the general gist of everything, it's just a float higher. Okay, I mean, okay, I take that back. Today was obviously not just a float higher. Today there was actually a lot of action. I mean, we went up over $1 on SPY, which is a pretty big move. So yeah, definitely a pretty big move. So let me go back to the daily. All right, just like I said, a little while ago, this I'm ready to stop out. Okay, I'm gonna, I'm debating if we close again higher here, if even if it's 5 cents higher than the high of today, then I'll probably stop myself out and wait for the 142.78. However, you see how close the 142.78 level is. It's already at 144.99. Oh, I'm sorry, 141.99. So the 142.78 is not that far away. Okay, so I mean it's not even $1 away. So if it can get into this 142.78, in fact, what I want to see, this is what I want to see. I'll tell you what I want to see. If we get a doji candle, like say we gap up tomorrow again, and looking at the futures, it doesn't look like that right now, but let's just say we do. We gap up into this 142.78 level. We create some sort of reversal candle, like a shooting star or hanging man, or some sort of a doji candle or engulfing signal, or whatever the case may be. On volume, I mean, we get volume like this. Even if we get volume, that's really good volume. But even if we get volume like this, anything above this blue line is the average. Okay, anything above the blue line on a reversal candle, then I'll probably be buying more SDS. Okay, that's the way I'm gonna play this. And I'm just gonna cross my fingers and hope that next week we have an increase in volume. Okay, it looks like this whole week the volume has just been dead low, which gives the institutions a chance to prop the markets higher because there's just not enough sellers in the market. I mean, for whatever reason, there's a lot of people taking vacation. A lot of traders aren't just. I mean, the bottom line is a lot of people aren't trading in the market, whether on their vacation because kids are going to school, whatever the case may be. There's just no volume in the markets right now to bring the markets down. So would I be bullish? So because let's just say I think the rest of the month might be low volume, so would I be bullish? Absolutely not, because we are definitely in an overextended, overbought situation. Okay, so if I wasn't already short, then I probably would have stayed in cash by now, or I would be in cash right now. And that's because of the volume. The volume got to kick back into the market before I even take another trade. I thought we would get a little bit more volume this week simply because it's the options expiration week. We did get volatility, but we just didn't get that volume. So next week, hopefully we get volume back into the markets. But if not, What is next week? Next week should be the last week of August. So after next week, so we'll see how next week plays out. After next week, we go into the September uh, area, and September is normally a down month, I believe, which basically means volume should be coming back in the markets, and that's that. So let's take a look at the dollar. So here we have a chart of the US dollar, and I know I've been talking about this in the most previous video actually, that the dollar had some bearish sentiment, right? We talked about how it was bearishly consolidating, which would be inverse to the market. So if you're new to watching this video, the dollar is inverse to the market. Dollar down, market up, market down. It's as simple as that. So if the dollar is showing some bearishness, which I did talk about, that the charts are telling me that, well, I said in the previous video, the charts are telling me that the UUP or the dollar is in a bearish sentiment, but I think it's going to be bullish. Obviously what I think is not what I see, and you have to trade what you see and not what you think, and that's why involving your emotions in the way you trade will probably make you lose money. In any case, this is what I see right now on the UUP. We went into these these two moving averages, which would be pretty difficult to get through because the two moving averages right in the same general area there, and we also have this pretty good upper trend line here. This pivot point is right around that area, as well as this gap fill is right in this area, and then this pivot point here is right in this area too. So this is pretty good resistance, okay, in my opinion. So definitely that's why we got a bounce off, and again, if the dollar goes down, the market goes up, and that's exactly what we saw today. Will we see any support anytime soon on the dollar? Well, we will see some support over here, but because again we've already used this support, because we combined these two pivot points here, we had this gap window and this pivot point here already creating the bounce in the dollar, and then we tagged it pretty much again over here. This line is used and abused, so there is a possibility we may break down and actually reach this area here. We could potentially actually get into this 200 moving average. If it does, then that's obviously going to give a bullish sentiment to the actual market. So that remains to be seen. That's something that we have to keep an eye on, or at least I have to keep an eye on. And if the charts are telling me that the dollar is showing a lot of weakness, then obviously I'm going to have to switch my bearishness to bullishness. But if I get stopped out, I get stopped out, and that's why we have our stops. That's why when I do stop out, it's going to be for a small loss, so it's not going to be that much of a big deal in my opinion. So moving on, let's check out the VIX. All right, this is the chart of the VIX. All right, so previously we had some fear coming into the markets, but the fear wasn't very strong, obviously, so it wasn't that good. Let me see if I can extend this line over here. Wow, amazing. You see, I just extended that line there. I didn't even notice that until just now. That lines up pretty well, so I'm just going to save this chart here. So we are finding some support around here. I wonder if I can draw a line over here. I mean, I guess I could, but it's not really all that pretty. So this is more of a ginormous falling wedge here, which eventually should break out. But again, we got these two moving averages that are coming close together right now. It's below the 200 moving average, so the VIX is showing a lot of weakness right now. And again, if we don't get any fear in the markets, and that should induce some volume as well, which coincides with each other, then I would just have to give the markets an upside bias. I mean, it's technical analysis. It's not what I think, it's what I see. And what I see right now is no volume in the markets, so I have to give the markets some upside bias. But because the markets are in an overbought situation, I would not go long the markets. So neither would I be long or short at this time. So right now I just want to see what the markets are going to do. Unfortunately, I'm already short, so I might have to take a stop pretty soon, and not a big deal to just be a small loss. But that's money management. That's how you manage your money. You have to abide by your stops, and your losses has to be a minimum, right? Again, like I said in the previous video, you don't want to use more than 10% of your capital, and of that 10% of your capital, you don't want to lose 10% of your investment. And if you did lose 10% of your investment, then that is only 1% of your total capital, and that's how you manage your money. So my stop is actually less than the 1% of my total capital, because I'm not going to stop out at a 10% loss. I'm stopping out at a lot less than a 10% loss. So I'm like point something loss of my capital. So it's not really a big deal in my opinion. So, but however, I just have to say the markets are looking pretty strong right now. But at the same time, I still stand by being a little bit more bearish than I am bullish, and it's only because I haven't been stopped out yet. And until we get a close and a confirmation above the double top on the SPY, then I'm still gonna call this a little bit more bearish and bullish. However, anything can happen. Like I said, nothing's 100%. So if we keep on floating higher, then the markets are just going to keep on continuing higher, and there's nothing any one of us can do about it. We have to trade what the markets do, because the markets will not trade the way we want it to trade. We have to trade the way the markets trade. Okay, so that's just how it is. So that's your 7-minute market. Now it's actually your 15-minute market analysis. And I appreciate you guys coming by to watch these videos. Thank you very much, and I God bless to you all, and good luck, and I hope I see you in the next video.